What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and yeah, let's get straight into things. So we have started the month off now. We've started August. I do plan on making a separate video with a high time frame analysis of how I want to see the month trade, but generally speaking, I am expecting a down close month, meaning that I want to see the high of the month get made earlier on in the month, and then expansion for the rest of it. So we are going to start here on the monthly, and I'm just going to draw our attention to a few things. So obviously here's August 1st, and if we drag out this right here, this is going to be a bearish order block. Now I'm going to be looking at the midpoint of this to provide resistance because I want to see lower prices. So let's get that marked out real quick. And then the fact that I'm expecting this to provide resistance is going to help us with our expectations for non-farm payroll. Now, before I continue, please guys, the way I'm looking at non-farm payroll, non-farm payroll is the most low probability trading day there can be. So do take everything with a pinch of salt, but nonetheless, this is my expectations of what I want to see happen. So this is the very highest I want to see price trade this month. And like I said, on the back of non-farm payroll, it wouldn't surprise me if they wanted to try and send price higher before setting it lower potentially next week and moving into the rest of the month. So yeah, let's drop down to the weekly. I am going to get rid of this box because this is all we need to pay attention to. Let's write this out as monthly mean threshold. Which is basically just the midpoint, which means the midpoint of a order block. That's all that is. So let's get that delineated like so. And then you can see here we are now on the weekly. So let's look to what we've traded to on the weekly. We've traded down, taken out last week's low, and you can see how we've respected that 50% level perfectly, and we've came off of it. And then we've also traded higher and traded into this fair value gap. So both sides and both PD arrays I drew our attention to has been traded to. But like I said, we're expecting the high of the month to get made earlier on, which is why I'd like to think that we can start to see a continuation higher to this monthly mean threshold. So what does that mean for non-farm payroll? Well, now we need to start thinking where the lowest we want to see price trade is, and then based off that we can start to frame a potential, outcome. So let's go to the daily, and you'll see how we traded lower, running out these sell stops, and then we had a massive up close day followed on Thursday after taking out Wednesday's low. So the fact that we've grabbed stops below here, that's significant. The fact that we've also respected the 50% level of this bullish order block. So if we drag this out like so and we look at the 50% level, you can see our volume has stayed above it, again showing bullishness, and now it looks like we're about to close above it again. So this is all showing a willingness to want to trade higher. So tomorrow I am expecting an up close candle. Now, like I said, non-farm payroll can be very volatile, so we need to take that into account. But in terms of where I want to see you targeted, I'm looking at this for buy side liquidity. So let's get that marked out. And then I'm also looking at this as a potential reach as well. Now this is a bit of a stretch, however I am looking for this to get traded to, and then in that case I'd like to see us trade up into this bearish order block right here. So let's get these all delineated. Excuse me guys, hay fever season. We've got a bearish order block, a daily bearish order block right here. Move this to the right. So yeah, and then you can see we've already grabbed stops below there. So now as we drop down to the low time frames, I'm going to be looking at potential PD arrays that we can use to key off that ideally will help send price higher in line with non-farm payroll. Again, very low probability. I do not recommend trading non-farm payroll whatsoever. But yeah, that's going to be the last time I say that. So let's now look at this order block, and what we can do is we can actually look at the 25% level as well. And as we drop down to the lower time frames, we can look at that range to see if there's anything around there that we may want to use to potentially key off of. So let's get that marked out. We'll go to the 4 hour now, and you'll see how beautifully price came down, grab those stops, and then we've had a beautiful expansion to the upside. So this is what we have as a breaker now. Why? It's the last up close candle before the down move that caused the expansion. So this is now a breaker. We also have an inversion fair value gap right here. Why is this an inversion fair value gap? Well, you can see we traded on the downside, closed on the upside, so now this fair value gap should be able to provide support. So let's make this that color, and we're going to call this a 4 hour inversion fair value gap. And ideally, if price comes back into there, we'd expect to find support. But again, as I was saying, as we drop down to the lower time frames, we should be able to find other PD arrays that will help support this. Another thing to take note of is look at how we traded down into this fair value gap, and look at the 50% level. We traded down and then came straight out of it. So as far as I'm concerned, this has already been mitigated. We don't need to come back down here again. So our next level would be the 50% level of this wick. So let's get that marked out right here. That's the low of the 4-hour inversion fair value gap. And again, as we drop down to lower time frames, hopefully we can identify a potential low of tomorrow. Now, yeah. So let's get that marked out. This is consequent encroachment. Let's make that red. So now we have a few levels marked out. We have a potential low as to where we want to see get respected if we're going to have higher prices, and then we have a buy side target as well, and where we'd expect price to turn if it is to trade up into that premium. Another thing to take note of is there is a nice little fair value gap up here above the buy side liquidity that I'd like to see price trade into. So let's get that marked out as well. And now let's drop down to the 1 hour, and we can see how we're just kind of consolidating right now. So again, came down. So sell stops have been grabbed. This is a breaker, low, high, lower, low. Again, if we drag this out, that lines up nicely with our consequent encroachment and the 4-hour inversion fair value gap. So moving into tomorrow, as price dips down into here, I'll be looking at potential shorting opportunities on the pairs and then longs on dollar, as this is where we should be accumulating, assuming price wants to go higher. So yeah, we can see we're just stuck in a bit of consolidation. Not the cleanest of price action. If you watched today's price action, you'll see today wasn't nice at all. Actually quite volatile, and you know, a lot of back and forth, which wasn't ideal. But nonetheless, I'm paying attention to this price level right here, 104.2. So let's get that marked out in black, and it'll be very interesting to see how price acts around here. If this gives way and we trade below it, then I'll simply, it is what it is, and I'll just leave it like I'm not. It's not that by the way, I'm not trading non-farm payroll for the record. I'm just showing you guys where I'd expect or where I'd want to see price trade. But as you've seen, weeks like these are so low probability, especially after how I analyzed yesterday's, like, things aren't going according to plan. But nonetheless, we move. Let's go to the 1 minute. Again, not really much going on here. A little mitigation right there. Again, fair value gap, and you can see we've just gapped quite aggressively lower. So yeah, that's all I'm paying attention to really on dollar. I just want to see how we treat this level basically. If we start trading through it, it is what it is. But ideally, I'd like to think that non-farm payroll is going to send price higher so that we can start looking at these buy side targets. Let's now head on to GBP USD. We're going to do the same thing. We'll start on the monthly, and you'll see how GBP traded the complete opposite direction to which I expected in yesterday's video. So what does that say? Take everything I'm saying with a pinch of salt. I'm not psychic. Nonetheless, if we're expecting higher prices on dollar, you know, at this time of the month, that means we want to see lower prices on pounds. So I'm happy for pound to start digging down deeper into its range. I'm not going to do a monthly breakdown of pound right now. Again, I plan to do that in another video, but nonetheless, we can take a look here, and you can see we have an order block. So price can key off this. So let's make this like so. Price may want to try and reach down for this bullish order block. We also have this right here. It's not very clear on pound. That's the problem I'm experiencing right now. But let's get this weekly fair value gap marked out, because the fact that we're inside of it should help us with targeting in terms of using the levels of it as for price to key off. So I'll show you what I mean by that. So we mark out the fair value gap, and then using the Fibonacci, we can split it into quarters. And ICT has taught all of this. And then what happens is you'll see how price uses these levels to navigate its way lower or higher. And then we have the low of the fair value gap right here. So now as we drop down to the lower time frames, I'll be looking at these levels to see, okay, what could price potentially make the high at if we are going to trade lower on non-farm payroll, and where would we want to reach for. So let's now go to the daily. Again, beautiful large expansion to the downside. You can see we're just held in a slight consolidation. I'm not expecting much of a retracement, to be honest. Any kind of retracement, that's where I'd be expecting shorting opportunities. And then let's get rid of these for now. There is a breaker right here, but if we're bearish, this should get disregarded. So I'm actively looking for price to disregard certain price levels. This is an implied fair value gap, so I'll make this yellow. This may be a drawn liquidity for price. But if price gets overzealous and, you know, non-farm payroll is moving absolutely crazy, then we'll be looking at this sell side liquidity right here. So let's go to the 4 hour, and now we can hopefully see how these levels may help us. So we have a bearish order block right there. Again, implied fair value gap, so price may want to retrace into here to create a potential high. So I'll be watching that level very closely. Actually, the yellow was better, wasn't it? But like I said, looking at how weak it is right now, I wouldn't be surprised if we wandered on down, maybe filled the fair value gap, then got a turn, and then turned lower. Does that make sense? Let me say that again. So looking at how weak we are, I wouldn't be surprised if pound managed to trade on lower, fill in the fair value gap, and then we get like maybe a London reversal, price trades higher to create a premium. And then, you know, if dollar does want to trade on higher on the back of non-farm payroll, that would set us up for potential shorts down into our implied fair value gap, which you can see is just a normal fair value gap on the lower time frame. So that's how I'm looking at pound. We will go to the 1 hour. Let's see. Again, little consolidation, but I'd like to think that if we do reach here, I could look for a potential setup for price. Let's go to the 15 minute. Again, it's clear consolidation. Nothing too crazy. We do have a breaker here. High, low, higher, high. So the low of this is a breaker, meaning that price could very well return to that. So I'll be watching. Again, if we do manage to trade on higher tomorrow, I'll be looking and actively waiting around specific times of the day to see if we do reach these levels, in which case a setup may form. But I'll talk more on that in another video. But nonetheless, overall, I'd like to think that we can make a premium and then trade on lower on the back of non-farm payroll. But you know how non-farm payroll is. Now let's finish up on Euro USD. I hope this is all making sense. I am going to clear everything here as well. We'll start on the monthly. Again, not really much to go off here, so let's go on the weekly. And then you can see that we're trading in a fair value gap currently on the weekly. So I'll be looking for us to fill this fair value gap if we are to trade lower. This is where I'd want to see price manage to reach to. Wicks are gaps too, and the fact that we traded and closed below it, this should now act as resistance. So if we do get retracement on Friday, again to create the high where we'd expect to accumulate our positions before shorting or whatever, this is where I'd expect it to find the resistance it needs. And ideally, it would be at the 25% level. Don't get me wrong, it can get to the 50% level, but the 25% level is a little bit more sensitive to price. Now, if you go and study this, you'll know exactly what I mean, but I'm looking at that 25% level. And then as price retraces into that, I'll be simply be watching dollar to see, okay, can dollar trade down into its discount before potential turn? So let's go to the euro. And you'll see our price is already wicked off that 25% level. Very interesting, isn't it? Clear, large expansion. But again, any kind of rallying, I'm actively looking for potential shorting opportunities. Let's go to the 4 hour. There's a fair value gap here. But again, it's looking extremely weak right now. So we may find that price does wander on lower first and then pull back on itself, create the high of the day at some kind of premium, and then expand on lower on the back of non-farm payroll. So the reason I'm explaining this like that is purely because, one, non-farm payroll is really manipulative anyway. So it wouldn't surprise me if they, you know, sent price lower to then send it higher to then send it even lower, and done that all in one day. It wouldn't surprise me. So, and the reason I'm saying that again is because it looks considerably weak. So any kind of retracement we see, I'd be seeing it as suspect retracement, and that's why I'd want to be you know, seeing it as a suspect run with the assumption that price does want to go lower. Don't get me wrong, we may trade higher and that may be what, you know, price does. It is what it is, but I'm looking to see if price can go lower. So any kind of retracement is a suspect rally to me, meaning that that's where I'd be looking for more opportunities. So let's just quickly drop to the 1 hour. Okay, not the cleanest. I marked this out because this is just a fair value gap, so price may want to fill that imbalance first before creating that false rally. I will make a video like looking at this. If price goes according to plan, I'll make a separate video and we'll go through it. But generally speaking, yeah, that's my expectations. So I hope that all makes sense, guys. It'll be nice to see if we can fill this fair value gap. It'll be interesting if we filled the fair value gap first, to be honest. But yeah, non-farm payroll, you know how it is. So that's going to be everything. Thank you so much for watching. Don't forget to drop a like, drop a comment, smash subscribe, join the Discord, join the mailing list, and I'll catch you guys on Sunday where we can do a fresh review and hopefully have a much more clean delivered week next week. Peace.